Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record a video per week, so make sure you're in the notification bell to get notified each time one comes out. I am trying something new for January 2025. New year, new me. If you comment in this or the other two videos coming out for the remainder of January, I will put you in a draw for 1 hour one-on-one mentoring video call with me, a $50 value. We can look at your portfolio, talk about financial independence, personal finance, retirement, whatever you'd like. So comment below, up to 3 entries allowed, one per January video. This video is going to tell you about my top 5 stock picks for 2025. We'll start with General Motors, GM, on the New York Stock Exchange, one of the world's leading car manufacturers. They have had a nice run up in 2024 and then pulled back some. PE is still in mid-single digits. I can almost say that GM benefited from the EV sales and their popularity slowing down. Parts of the technology are not as easy to use as most car owners would like, and GM has been subsidizing its EV manufacturing with light truck segments. GM has compelling valuation, and GM is not afraid of big stock buybacks. The firm's profitability is an encouraging factor. Highly profitable companies are often more resilient in recessions and are likely to generate stronger future cash flows for shareholders. The firm's earnings yield of 19.1%, for example, lies in the top 10% compared with global peers. This suggests that it is generating substantial earnings relative to its share price. If the US tariffs from the Republican platform do materialize, GM would actually benefit because it is an American company. Next, we have Polaris Renewable Energy, PIF, on the TSX. Turning to Canadian dividend payer, Polaris Renewable Energy engages in acquisition, exploration, development, and operation of renewable energy projects in Latin America. It has interest in a 72 megawatt geothermal project located in Nicaragua, a 5 megawatt run-of-the-river hydroelectric facility in Peru, and they also have solar projects. It has a PE of 29, a dividend yield of 6.3% with the cash flow covering the dividend 3 times, and a price to book of 0.78. It is considered a deep value play. I also like the 15% profit margin. Obviously a play on renewable energy, its share price has had a nice upward trend in 2024, and I expect it to continue in 2025. My next pick is Telus Corporation, or T on the TSX. Telus Corp is a Canadian telecommunications company which engages in provision of telecommunication services and products primarily for wireless voice and data, but also home internet and video that all Canadians should be familiar with. I see Telus as the best of the Canadian telcos. Their assets are very strong with a durable brand name throughout Canada, giving them an economic moat along with the oligopoly of Canadian wireless providers. There's only a few companies out there. Its competitors are BCE, which has a serious debt problem, and Rogers, which has a worse debt problem. And I'm not a fan of the owner-family dynamics for Rogers. Telus has a fairly high PE, coming in at 32 because it is a high quality company, but it has come down over 2024 and it is an opportunity. With a dividend yield of 8%, you get paid to wait for a recovery in all Canadian telcos whose profit margins are in single digits because of competition and a lack of Canadian population increases. As the inflow of immigrants lessened recently, the Canadian telcos got less and less new customers and now have to spend a lot of money to get customers from their competitors. Purchases in the US, like BCE, or an immigration increase will allow Canadian telcos to grow once again. Next pick is Baidu, or BIDU, on the NASDAQ. This is the default search engine for China, a parallel of Google. It has advertising revenue, increasing revenues from its cloud and now AI business, with its Ernie generative AI model becoming its flagship product. There are encouraging signs of its AI cloud monetization growing to 18% of core revenue in 2023 from 12% in 2020. Autonomous driving is also a major business venture for Baidu, but despite a potential total addressable market for autonomous driving that is 9 times its online advertising, according to management, commercial success is highly uncertain as revenue remains immaterial and mass-scale adoption of the autonomous driving or time to market are unclear. Baidu is a leader in AI with autonomous driving in terms of number of miles tested, and the number of driving licenses in China could be another growth catalyst. Baidu's operating margin is a very healthy 21%. Baidu's wide economic moat is created by its network effect from a dominant share of the user base and intangible assets from years of AI development and research and development. As one of the earliest internet companies in China, Baidu has built an ecosystem around search and successfully shifted to mobile internet by releasing various well-received mobile apps, such as its flagship Baidu app, which has 580 million monthly active users during the second quarter of 2021, and they have Baidu Maps. According to a web analytics firm StatCounter, Baidu's market share as of September 2021 was 82.5% compared with its closest Chinese competitor Sogou at only 7.6%. So pretty much like Google. With a current price of $77.43 US and a target price in the 150s, a PE of 110 and solidly profitable and at a 52-week low, Baidu is a value investor's tech dream. And lastly, Toronto Dominion Bank, TD on the TSX. A top 5 value investor stock list wouldn't be complete without a Canadian bank. For me, it was between TD and BMO, and I think TD has a shorter time frame to recovery. TD's price earning is 16.48, but if you add back in the one-time $3 billion fine to US regulators, it's a more manageable 13.8 PE. Yes, TD got into trouble in the US for money laundering, which I believe is present in all financial institutions. It's just that TD was more flagrant about it and got caught. Various penalties were placed on them, the worst being that they cannot buy a US bank. There's in fact an asset cap, which also limits the 2 US banks TD already owns, until the regulators are satisfied that all compliance issues have been resolved. This last item could take years, or if TD focuses on the anti-money laundering processes and corporate culture is changed to actually go through with those processes, it might go quickly. TD will continue to make money in Canada, be profitable, and pay the current 5.3% dividend yield. I hope that they will look to expand elsewhere and not limit themselves to the US, but after Bank of Nova Scotia pulled out of Latin America after an unsuccessful attempt to make a go of it there, I feel TD will persist in waiting to buy in the US. You can see from the chart that TD has come off the bottom nicely where the US regulator judgment was revealed. That was my top 5 stock picks for 2025. Let me know in the comments what stocks you like for 2025 and to enter the draw for the one-on-one hour of mentoring for January. If you have any requests you would like me to cover in future videos, also please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.